In today's world news, cryptocurrency markets are buzzing with significant developments. From regulatory shifts in Europe to new trading infrastructure for institutions, the crypto landscape is rapidly evolving. Additionally, geopolitical tensions continue to rise in various regions. Here are today's top 10 stories you need to know. As the cryptocurrency market continues to grow, regulatory changes are on the horizon. In the European Union, discussions are intensifying regarding the regulation of digital assets. This comes as authorities aim to create a safer trading environment, reducing risks associated with fraud and market manipulation. The European Commission is considering stricter guidelines that could affect how exchanges operate and how cryptocurrencies are traded overall. These proposed regulations could lead to a more transparent and accountable market, fostering greater investor confidence. However, some industry experts warn that excessive regulation might stifle innovation and drive businesses out of the EU. The outcome of these discussions could set a precedent for how other regions approach cryptocurrency regulation. As the situation develops, stakeholders are closely monitoring the potential impact on market dynamics and investor sentiment in Europe and beyond. In recent developments, institutional adoption of cryptocurrency is gaining momentum. Orbs, a decentralized Layer 3 blockchain infrastructure, has launched a new offering aimed at facilitating on-chain execution for institutional traders. This initiative provides trading desks, custodians, and other financial platforms with direct access to advanced trading technology. The focus on-chain execution reflects a growing trend among institutions seeking transparency and efficiency in their trading operations. As decentralized finance continues to expand, such infrastructure could significantly enhance trading capabilities while minimizing risks associated with traditional methods. The success of this initiative could encourage more institutions to explore cryptocurrency trading, potentially leading to increased liquidity in the market. Looking ahead, the crypto landscape may see further innovations tailored for institutional needs, reshaping how these entities interact with digital assets. Ethereum's future price trajectory is a topic of increasing interest among investors, with recent reports suggesting it may soar to $12,000 in the coming months. This surge is attributed to a surge in institutional investment and significant advancements in decentralized finance, or DeFi. The Ethereum network has been the backbone of numerous innovative applications, driving demand for its native cryptocurrency. As the DeFi ecosystem continues to expand, it attracts more users and developers, further solidifying Ethereum's position in the market. However, potential risks remain, as the cryptocurrency market is notorious for its volatility and sudden price swings. Investors must weigh these risks against the potential for substantial gains. The evolving regulatory landscape and technological developments will also play crucial roles in shaping Ethereum's future. As we look ahead, the next few weeks will be pivotal in determining whether Ethereum can maintain this upward momentum and reach its ambitious price targets. In a significant development for the cryptocurrency exchange Binance, the company has secured a license to operate in the European Union. This achievement marks a pivotal moment for Binance as it enhances its credibility and strengthens its foothold in the competitive crypto market. The EU is a crucial region for cryptocurrency operations, and obtaining this local license allows Binance to offer its services with greater confidence, it catering to a growing user base that prioritizes security and regulatory compliance. Furthermore, this move aligns Binance with stringent regulatory standards, potentially attracting more institutional investors who are often hesitant to engage in unregulated environments. However, this step also invites increased scrutiny from regulators, which Binance must navigate adeptly to maintain its reputation and operational integrity. As the exchange expands its footprint across Europe, it will be essential for Binance to strike a balance between compliance and innovation. Looking ahead, the company aims to leverage this license to introduce new features that meet the evolving demands of its diverse clientele. The global cryptocurrency market is experiencing notable volatility, with significant price fluctuations across major assets like Bitcoin and Ethereum. These sharp movements reflect heightened investor sentiment and are largely driven by recent global economic conditions. Factors such as regulatory developments in key markets and fluctuating macroeconomic indicators, including inflation rates and interest changes, are contributing to this uncertainty. The current environment has sparked a mix of fear and opportunity among traders, leading to quick buying and selling decisions. For many investors, navigating this turbulence requires a robust understanding of market trends and a strategic approach. Analysts emphasize that those who stay informed about the latest developments will be better positioned to capitalize on potential gains while minimizing losses. As the market grapples with external pressures, including geopolitical tensions and technological advancements, its trajectory remains unpredictable. In the coming weeks, the crypto market's ability to stabilize will be pivotal for investor confidence and overall market health. In a significant move against illegal financial activities, Iranian authorities have seized a substantial amount of cryptocurrency assets. This operation is part of a broader initiative aimed at combating illicit transactions, which have proliferated in the unregulated digital currency space. The Iranian government's actions come amid rising concerns about the use of cryptocurrencies for money laundering and financing terrorism. As countries around the globe grapple with how to effectively regulate this rapidly evolving market, Iran's crackdown serves as a cautionary tale. It illustrates the potential consequences of unregulated crypto activities, raising alarm bells for governments struggling to implement effective oversight. The impact of these seizures could shake investor confidence, particularly in regions where regulatory frameworks are still ambiguous or non-existent. As global regulators continue to navigate the complexities of cryptocurrency, the situation in Iran underscores a pressing need for clear, enforceable regulations. Moving forward, it will be crucial for nations to collaborate on establishing comprehensive guidelines to ensure consumer protection and market stability, fostering a safer environment for digital asset transactions. France is moving to tighten regulations surrounding cryptocurrencies, aiming to enhance consumer protection and prevent financial crimes. The French government has introduced new measures that require cryptocurrency exchanges to comply with stricter reporting and operational standards. This initiative is part of a broader effort to establish a secure environment for digital asset trading and to mitigate risks associated with fraud and money laundering. The tightening of regulations reflects growing concerns about the volatility of cryptocurrencies and their potential use in illicit activities. As a leading financial hub in Europe, France's regulatory approach could influence how other countries shape their own cryptocurrency legislation. These changes are expected to impact both domestic and international exchanges operating in France, potentially reshaping the landscape of the French crypto market. As these regulations take effect, exchanges will need to adapt their practices to remain compliant. Looking ahead, the evolving regulatory framework in France could serve as a model for other nations, encouraging a more standardized approach to cryptocurrency governance across the continent. China is actively expanding the usage of its digital yuan, a central bank digital currency designed to modernize its financial system. Launched in 2020, the digital yuan aims to streamline transactions and enhance financial security. The Chinese government is promoting the digital yuan for both domestic transactions and international trade, signaling a shift in how currencies can be utilized globally. This expansion represents a significant step towards integrating digital currencies into everyday economic activities, potentially reshaping consumer behavior and business practices. By increasing the adoption of the digital yuan, China aims to enhance its global economic influence and reduce reliance on traditional financial systems dominated by the US dollar. The implications of this move could be profound, affecting global trade dynamics and the role of cryptocurrencies in international markets. As the digital yuan gains traction, other countries may feel pressured to explore their own digital currency initiatives to remain competitive. Economists predict that this could lead to a new era of currency competition. Looking ahead, the success of the digital yuan may inspire a broader acceptance of digital currencies, fundamentally altering the landscape of global finance. As cryptocurrency markets brace for potential new regulations, analysts are making bold predictions about the future of digital assets. Recent developments indicate that regulatory bodies across the globe are tightening their grip on the crypto sector, aiming to curb illicit activities and enhance consumer protection. Amid this backdrop, speculation surrounding Bitcoin has intensified, with some analysts projecting a staggering price target of $250,000. This optimism is largely driven by anticipated institutional investments, favorable exchange-traded fund (ETF) inflows, and improved liquidity conditions in the market. If these elements converge, Bitcoin could experience a significant surge, drawing in more retail investors and potentially pushing prices to unprecedented levels. However, it is crucial to recognize that regulatory changes can also introduce volatility and uncertainty, potentially destabilizing market dynamics. The potential for sudden price fluctuations may lead to heightened caution among investors. As the crypto community closely monitors these developments, they are acutely aware of the impact regulations could have on trading behaviors and investment strategies. Looking ahead, the interplay between regulatory frameworks and market sentiment will be critical in shaping the future of digital assets, with many anticipating that clarity in regulations could catalyze a new phase of growth in the cryptocurrency market. Recent geopolitical tensions are having a profound effect on global cryptocurrency markets. Heightening concerns over international relations, particularly between major economies like the United States and China, are leading investors to reassess their strategies. These tensions stem from trade disputes, military posturing, and differing political ideologies, creating an unpredictable environment for investors. As nations navigate these complex political landscapes, the cryptocurrency market is experiencing significant fluctuations, with traders reacting swiftly to news and events. Investors are particularly wary of how these tensions could influence regulatory actions and economic stability across various regions, leading to heightened volatility. The uncertainty surrounding geopolitical developments may drive more individuals to seek refuge in cryptocurrencies, viewing them as a hedge against traditional market instabilities. This shift could result in increased trading volumes as investors flock to digital assets, particularly Bitcoin and Ethereum, which are often seen as safe havens. Furthermore, analysts suggest that as geopolitical tensions persist, we may see an acceleration in the adoption of cryptocurrencies among those looking for alternatives to conventional financial systems. The coming weeks will be crucial in determining how these tensions will shape the future of cryptocurrency markets and investment strategies, particularly as regulatory frameworks evolve in response to global events. Investors should remain vigilant and adaptable to the changing landscape ahead. Thank you for tuning in to our roundup of the most impactful news stories. Which of today's stories shocked or surprised you the most? Don't forget to like and subscribe for more updates.